Alphabet. Alphabet. Alphabet Inc. Alright, guys, I did a podcast for Google January 7th. Let me zoom in. That was not too long ago. And I had it right here this week, right here. And I had it fighting hard to stay into a stage 4. It had broken down out of the Ichimoku cloud below declining 30-week moving average. And the price action was just hogging that Ichimoku cloud defined support, guys. And it really does serve. It absorbs, not quite like an iron wall, but a zone and just like a little magnet sucking the price action back up. Really added that. Thanks to Isa Trader from stageanalysis.net. I got Stan, one of his tenets was make sure there's no close overhead resistance or close over underhead, underfeet support if you want to play stage 4 breakdown. And sometimes you kind of cheat yourself. You look, it's clear. The Ichimoku cloud really shows you visually by projecting in the future where you might hit that resistance or that support. All right, guys. Okay, let's go back. January 7th is all that month. All this candle now has closed. So January 7th is kind of the bottom here. Closed all the way back up here above the 12-month moving average. Still declining 12-month moving average. And now we're approaching halfway February. Still declining. Oh, no, inclining. So now that created some inclining 12-month moving average. So on the 12-month chart, on the monthly chart, we are back into a stage 3, guys. Here, we're in stage 4. Yeah, right here, starting to go into giving signs of a stage 4. Still in the stage 3. Important breakdown levels right here. 10:15. Where's that close? Close. Yeah, about 10:15, 10:18. That's what we're going to be looking at for a close below that. And for this to really resume an uptrend, to get out of that stage 3, we're going to have a close above 1240, guys. So we're not quite there yet. And you see that 12-month moving average, it closed above, barely, not really convincing, but it's still enough for you to stay on the sidelines. You want to go in A++. Setup's not let's hope it's going to go back down. But right now it's showing us, you see, it had price action way above the 12-month moving average. And now that's why you got to always wait for the end of the month. And even in the next 2 weeks, this could pop back up. But right now, that's going to be seen as a wick, just as we have wicks here. Wicks here. Below monthly defined support or being defined support or resistance. The 12-month moving average. You want to close below that. You don't want to go short if you're above it. So the price action, the seller's coming in, pushing that back within the boundary. On the weekly chart, this is going to be looking a little bit more playable, guys. So you're going to want that 12-month average to start going downwards. And on the weekly, we're going to want to have some type of action. Stan Weinstein setup that's going to give you a good weight of evidence that we're going to go back and challenge that monthly defined support right here. Sorry. Let me draw those lines back. Okay, this one, I'm putting it right there. Okay, so I'm leaving it here. Remember, leave your monthly candle, monthly defined support breakdown lines, because when you go on the weekly or smaller time frames, they still exist. They're still there. You can sink through them, but you got to be wary that if you don't close below it, price action came back up, closed above that. So it avoids whipsaws, guys. All right, Ichimoku cloud, sucking that back up, hitting that monthly defined support, bring the price action up. In the meanwhile, we got some mixed signals here on the Mansfield relative strength. Remember, green, you have that triple Indication clues, stand Weinstein tenants above the 30-week moving average, inclining 30-week moving average, and overperforming your baseline, the SPX. So right now here we're overperforming the SPX. That's one of the checks, but you're still below a declining 30-week moving average. So you're not getting the green light. Green means go. You're still not getting that. But what's happening now, you're starting to decline or slowing down your overperforming of the SPX. And right now you're below the zero line. So what does that mean? That means you have those triple checks. Declining, below, and starting to underperform the SPX. And especially when it crosses over, that's usually a good moment where it's not overextended. And if we could close right below the cloud, guys, we're so close. So we're going to see if we could end the week right here below the Ichimoku cloud. A couple of things going to happen. You're going to have that red candle. So after that uptrend, you're getting a red candle. Below, you're getting lower highs, lower highs, lower highs. And this could be, and you have no more Ichimoku cloud support. You're out of there. This could be the pullback that has completed or is completing right now. You even had some weekly defined support here, broken down. Oh, retested, gapped above, but went back down. And now you're re-hitting those levels here. So this is a nice low risk, high reward situation. If you could just wait for the end of the week. And if you're really, really patient, you wait for the end of the month. There's a whole bunch of other clues. I want an arrow. Give me an arrow. Whoa. That's a big one. Copy, copy, copy. All right. Look at these volume candles here on those red days. Oh. There's another one. And here, this week's. So green volume, light volume on those up days. And then, bam, the hammer. The hammer of the red candle, the hammer of the higher trend decides to hit. And it ripples through all other smaller trends within it. And even here, remember the damage, big down days, down weeks, huge volume. All right. I could check. Let me check one thing first. How far are we distance from the 30-week MA? Look at that. Power zone. Right there. Really close. Really got patient, really close. And for your weight of evidence, if everything says you have all the other checks that you're still in the downtrend, you're getting to a nice zone right here. And I posted something on StockTwits, Twitter, and I've noticed lower highs. Wow, dyslexia is awful. Lower highs and higher highs on the stock, fast stock. That's going to start being consumed. It is. And a red candle is going to confirm that turnover on the weekly chart. So that's going to be giving you energy. Whoa. To consume, to bring that down, to go and test those lows right here, guys. NASDAQ. I can zoom in on the daily. But the more you zoom in on time frames, is because the higher time frames you're looking at haven't given you a confirmed signal yet. So if the monthly is just you still have a monthly candle and it's close to something, but it's not breaking down below an important support line, then you zoom in on the weekly. Okay, am I starting to turn around? If then you start seeing you don't see any red candles yet on the weekly, then you say, okay, I'm going to go on the daily, see at least am I getting a few days that are starting to turn down. But right now our weekly is already starting to turn down, so we're going to focus on that as our confirmation or as our stronger, higher weighted clue that we're turning around the corner around these levels. But if we didn't have that, you'd be going here on the weekly, on the daily, and checking the details. Above the 50-week moving average going upwards, but that's a classic of stage 4's pullbacks. Google is not fully in the stage 4, but after a previous high and then going down and then pulling back up. That happens often. And sometimes you do get action above the 200-day moving average. So this on the daily is not looking so good. That is the price action we saw above the 12-month moving average. That's the price action where we saw the wick on the weekly above the 30-week moving average. And it's on strong volume, guys. Look at that. So you got to be really, really careful also for the to avoid the whipsaws. Wait for the higher time frame. See overall how the volume ends up. But this is, this could have given you a false signal here. So this is pretty strong volume above weekly, daily defined. So that's a good case for the bulls right here. It broke out above the 200-day moving average, strong volume, but gap down, close below, and now big gap down. We're going to have to see how the week ends, guys. So this on the daily, maybe this going to get a little push back up, and then we go back down later on. But there's a little war here happening. So for Google on the daily, even more signals, even more reasons to wait for that weekly defined close and really make sure that we're starting to turn around that corner. All right, Google, you're looking to continue. Exit that stage 4, that stage 3, go back in stage 3 and stage 4, and hopefully get a monthly close that's going to turn down the 12-month moving average. And the longer we stay below that 12-month moving average, the more it's going to start skewing downwards. Test, down, test, do, until you're out, guys. All right? All right, Google, more patience required, but not that much. Thanks, guys. Don't forget